Welcome to my channel, Learn and Earn, to live your life on your own terms. Hello everyone, you're welcome to my channel, Learn and Earn Academy, and today in this video we are going to talk about liquidity crisis. Now today in the news, if you see, most of the news channels and newspapers will cover the slowdown in the economy which India is facing at the present moment. What are the reasons for this slowdown? Why is it that all these sectors in Indian economy are moving at a very slow pace? The contribution to the GDP has drastically reduced. The people don't have money to make big purchases. What is the reason? The reason is liquidity. And what is liquidity? Liquidity is cash. Liquidity is the amount of money in your hand. So let me explain this to you in a very simple term. Now, liquidity in broader context can be described as the degree to which an asset or security can be bought or sold in the market at a price value. In simple terms, liquidity can be defined as the ease of converting to cash, often considered the most liquid asset of all. Now, cash is considered to be the basic standard of liquidity as it can be converted to other assets quickly. For example, if I have to buy a motorcycle and I already have a motorcycle which is not as per my requirement. So can I buy a new motorcycle without even having the money? No. Even if I want to try to sell my existing motorbike, I have to look for customers, a person who will purchase my existing bike. So for me to sell my existing bike and purchase a new one, I need to sell my old bike, for which I need cash. In order to purchase the new one, I need cash. And to sell an old bike and get a customer is not easy. So liquidity for me is not easy. To get easy cash for my old vehicle is not possible. Even if I want to buy a new bike tomorrow, it may not be possible. And this is called liquidity crisis. Now the government of India is facing an unprecedented scenario. Citing the liquidity crisis, it has kept the financial sector on heels. Now the government is trying out of box measures to tackle shortage of liquidity, which has triggered a growth slowdown in several of the country's core sectors. But what is liquidity? Again, I'll get to the basic concept. For instance, people can use money to buy assets quicker than any other medium. If a person has rupees 50 and he wants to buy a chocolate, uh, he could purchase it at any store using the cash. However, if the person has a pen worth rupees 50 and wants to buy the same chocolate, he will have to first sell the pen and then use the cash to purchase the same. Therefore, the shortage of cash in the market could lead to reduced liquidity, thus reducing the extent to which the market allows assets to be bought and sold. So the market, the availability of money in the hands of other person to purchase my old vehicle so that I can purchase a new one, the availability of cash in the other person's hand to buy my pen so that I can go and buy a chocolate is liquidity crisis. So having liquidity assets are important for business as it helps them quickly acquire assets and expand their business. Now no liquidity means economic slowdown. Now key Indian sectors are experiencing a period of acute consumption and slowdown. followed by a period of extreme liquidity crunch. Now, why is this happening in the Indian market? Now, we all must have heard about the ILNFS crisis. ILNFS had taken loan from banks in 2018 and they were not been able to pay back the loans, and the total outstanding debt of the company as on September 2018 was almost 1 lakh crore. Can you imagine a customer, a lender, a borrower taking 1 lakh crore rupee from the market and not able to return the same to the banks? It'll be a catastrophe. The collapse of ILNFS is one of the key reasons behind lack of liquidity in Indian markets. Shadow banking companies or non-banking financial companies, which usually lend credit to small business and individuals, had dramatically slashed lending to bulk of companies, leaving them with pending dues but no cash to acquire new assets. At one time, after the collapse of ILNFS last year, NBFCs were gasping for breath as most of them were knocked out by the massive defaults at the major infra and financial services firm. No one was ready to give loan to new industries, to new infrastructure projects. So there was no creation of job. And you can imagine, for small scale business, the credit from NBFC is an integral part of an operation. But because of sharp drop in credit availability, many businesses had to shut down because banks were not willing to lend even to the small businesses. Now, according to data obtained from Finance Industry Development Council, which is a self-regulatory organization registered with Reserve Bank of India, NBFC lending had dropped significantly in the first 3 months of 2019. The situation has shown no improvement as financial organizations try to reduce their exposure to bad loans. There is no trust in the market among private players. Now, you must have heard about the recent crisis in the automobile sector. Major automobile companies are going through a period of extreme financial stress at the moment. The consumption is low, the manufacturing activities have taken a hit. But why? Automakers and dealers have cited number of reasons behind the slowdown, but added the liquidity crunch among India's NBFC is one of the biggest factors that have contributed to the slowdown in the sector. The people do not have money to purchase vehicle. There is no liquidity in the market. And until the liquidity is restored in the market and the purchasing power of the people, the common man, is increased, Indian economy is going to face the slowdown. It's tough time for the country and the government should definitely look into this. So if you like this video, you can press the like button, subscribe to our channel and share it on social media. Help us to spread education in this beautiful world. Thank you.